Good afternoon. This is our 3 p.m. Do-it-yourself session. We always do that to give the knowledge we have to you so you literally can gauge that knowledge to see what you can do with what you learned here. Today's topic is about tariff tax. Obviously, it's an old topic, but we are focusing on how that impacts your financial statement, how that impacts your accounting. So today's topic is accounting and reporting consideration around the tariff tax. So let's get going with what we planned. And in this webinar, and in our webinar, we always start with introducing our firm to you, just in case you are new. And our firm's website is communitycpa.com. Right on this website, you can see we have this On Board with Us button. This is really a button designed for our small business owners when you are so tired working every day, and then at night and on Sunday, you suddenly realize that you need some help from accounting and taxes, and you just really don't have time to think about it during the busy weekdays. Then you can come over here on board with us through this portal. It's a private portal. You subscribe to it. It's right on the bottom when you go in, and you can give yourself a username, password, so you can go in and start uploading information to us, and we'll get back to you right away. Then, of course, you also see appointment button. This is where you make appointment with us. Then the next three buttons are for our client. We have our clients would pay invoice online. They can also open up their portal to see all of their related company. If you have 58 companies that related to you, no problem. You can log into client portal, see all of them in the very organized way. Our client portal is designed by our firm, and we designed it based on our clients' needs. So it's much more intuitive. It's not industry product template. It is something that we did for you and just for you. Payroll portal is the same. If you want to do your payroll like how you do it with ADP and check Gusto or checks, paychecks, whatever. All of these depot-like service providers, you got the 1-800 number you call, and sometimes there's people receiving your calls, or sometimes it's recording to answer you. But our payroll service is a person payroll service. So our payroll teams is here. They answer your questions. They're real people. You'll get to know them. We don't have 200 people working on payroll, so you will absolutely know who is the partner and who is the experienced payroll staff. So, it's an in-person service in this massive IT world, right? So with that said, this is our YouTube channel. Our YouTube channel is called Community CPA. You can come over here, subscribe to our channel. We literally had this channel since March of 2020. We're talking about 5 years in the making. We're talking about 4 videos a week. So we have a lot of videos in the category. If you just coming into videos, you can see we are grouped them into topics, right? So you will see what we talked about, and visiting these knowledge, it is always good for you to know these knowledge. I have 2 books on Amazon that you can purchase, and these books are business books but trenched with stories of our client and our own stories, how Community CPA has come about. So it is quite a personal journey and with my clients. That's how I wrote the book. So I have 2 more to go. The third one is 2 p.m. That is about expanding your business. Then the 6 p.m., which is the number 4 in the 4-book series, that is how to retire from your business. And I have no clue of how the 4th book is going to come through, but the 3rd one, it is something that I have a pretty good idea, and I'm working on that. with this tariff tax and anti-immigration environment that we have today. So that book can be very reflective of today's environment. That is when history is made, right? History is made by all of these input from people writing that period of time in the micro ways, in the small ways of reflecting a big environment. So you absolutely will see that too. You actually would already see that in my first book, where IT numbers is worked magics for people and growing your business, and you see the society, how the employer and employee relationship starts forming it differently. And there's so much of freedom, is so much of a human rights are trenched into the workspace. So giving directions on the business owners how to manage the business. So it is all about how to be a genius when you are in certain environment to still accomplish profit. So with that said, and let's just go to our today's topic. And prior to that, I want to acknowledge of the webinar's content today is actually is brought and inspired by Mark Friedrich. And this is a Vice President of Governmental Affairs at Walter Kluwer Tax Accounting. It is the most authoritative resources, right, we have in the tax industry. So he actually wrote about an article, and we are referencing the article to come up with more organized ideas. And like I said, it is coming from that content and inspired me to go through it and explain it my way, Chinglish way, right? That's what we always say. So, of course, why tariff accounting reporting matters. And with the new tariff actions by the U.S. government in 2025, many businesses face increased uncertainty in operation. Supply chains and the financial results are also affected, right? The recent tariff changes affecting companies in a very big way, and we will explore these kind of changes, how they impact your accounting. So a lot of times, especially small business owners, we sort of don't care about accounting, right? I hear a lot of our small business owners will say that, oh, I just care about taxes, I don't care about accounting. That sounded so reasonable, because what is accounting do? Nothing, right? It's just bookkeeping. But in order for your taxes, I have my grandson here and he's not being quiet. Okay, TK, you need to go if you are not quiet. You promise to be quiet? All right. Okay. And I'll have to introduce you to him if he make another sound. But this is where we want to say that for small business owners, you understand when I am talking to you, here is a little grandson is here, and that is our life, right? And we are families, and we are here dealing with serious stuff, but we also have loving families that we need to take care of. And he volunteered to be here, and he promised me he doesn't gonna make any sound. It doesn't look like he's keeping his promise. So we'll see how he does. All right. So for small business owners, I want to say that if you don't realize how important the accounting is, that is because you haven't really seen the difference on taxes based on your accounting. A lot of times you go to the tax preparers, you already wrote down your income, your expenses. Here you go, and you do my taxes. That is very basic. And you may be right, you may be wrong, but the tax people are just going to reflect on your accounting book. Right? So I always say that if you want to do your taxes really efficiently, if you don't want to pay tips to IRS, so they are not going to build the ballrooms for President Trump, then you need to make sure that your accounting is done properly. And with tariff tax, there's so many things related to accounting, and that is what we are trying to focus, tell you that your accounting need to change. All right. So with that said, in the last point here, we will explore accounting reporting implications under GAAP and SEC requirement. So GAAP is the standards to tell accountant how to do the accounting statement in such a standard way. And then everybody reporting the same, right? Because we want a standard so everybody report the same. So that's GAAP. Then SEC requirement is for the public companies. You know how you can go online to buy stocks from the public traded company? Those companies are required to file financial statement. They require to do 10K reporting so you can see the management analysis and all of those data. So this is where we say that, even though it is required for public company, but kind of tell you it is important, right? Because, if public company cares, and obviously, that's a big company, but small company is like a small bird. We also have all of the inside a giant tiger has. So we also want to understand it and take advantage of it, or making sure that we're doing it right. So the background. So what changed? In 2025, the U.S. implemented a reciprocal tariffs, which is like peanut butter approach 10%. But of course, when U.S. does that, reciprocal tariff just means that it's a tit for tat kind of game. Does that make sense? So they are tariffs on imports that matches the tariff imported by the country of export. So basically, it's a tic-tac kind of thing. And you do it, I do it, reciprocal tariff, and trying to be fair per se. But in reality, it affects all the countries, plus higher tariff targeting the country has a trade surplus. So, this is where I always say that a trade surplus is almost like you have a trade surplus when you overspend your credit card in your pocket. You go to Menard and you're spending your credit card, and so you bought more things but you didn't pay, so you have a trade surplus. So trade surplus can hardly, because of the other country, is not fair. The trade surplus is all about the other country's product is more attractive to you. That's why you bought it with your credit card. It is not because the people are so mean, they ordered you to buy it, so you got a trade surplus. So this tariff tax is saying that, our people love the Chinese product or Japanese product or EU product too much. And we want to raise tariff tax on them so the price go up, so people cannot just love it. They have to look at the price, goes, okay, I'm not getting it then. So that's what we are doing right now. But this affects industries like auto, steel, aluminum, and those are the big impact to those industries. Of course, small business like your and mine, and we're not operating in this sector, so we probably don't feel pain on our skin. But the understanding is, the tariff tax is like water in the river to just go higher. So that just means inflation will be higher. Many foreign countries responded with their own tariff tax and a trade measure against the U.S. So it's not like just us, raising tariff tax so that product will be more expensive in U.S. and they also do that too, so nobody buy U.S. stuff. Okay. As a result, company may be affected. A lot of companies are negatively affected. Supplier relationship changing, sourcing strategy, sourcing for industry, for businesses. TK, go sit there, please. Yeah, can you go to see Daddy?
I'm sitting under it.
You cannot do this. Grandma is working. You promised Grandma that you will be quiet.
What about promise?
Are you breaking your promise?
No.
No? Then you please keep your promise. Okay? All right. As a result, the company may be affected. They are already affected. Supplier relationship, sourcing strategy. Sourcing strategies is just where you buy things. So if China got so much tariff tax, and they also react to U.S. and raising their taxes on U.S. product. So there is no place to buy things, and you go other places, right? Location might change, just like Apple changed their factories to India, spend billions. We're talking about billions just to move the factories, right? Vendor payment terms has to change because the stuff could stuck at the custom and cannot clear the border. And our tariff tax is also changing so frequently. Today is 10%, next day is 35%. It's more frequent than me changing dog diapers. So it's like it is a lot of changes, right? So all of these business decisions will come through because of tariff. Tariff obviously included the cost increase. So that's really why it's triggered so many other things in the financial statement will be different. So now financial reporting and disclosure are mandatory for those public traded company. Of course, as a CPA firm, and we understand those public company, the requirement they have when they are, especially when they need to issue MD&A report. MD&A report is management discussion and analysis report. This report is required to be submitted on the 10K or annual report. So it is a report talk about the business to make the investor understand this business is going to survive or not. So with all of these things, it is so absolutely needed to be articulated for those bigger companies because they're public traded. But with small companies, with a company with $500 million a year in sales, you're a closely held company, you still needed financial reporting and disclosures for the business owner to actually see how we are doing. So with that said, it's become a necessity for accountants to understand what might change with tariff tax. So let's go one by one. Inventory. ASC 330. ASC here, it stands for Accounting Standards Codification. So it is a rule. It is a statement of how inventory should be treated. So all the accountants across the board can report inventory in the same way. So we can be playing on the same play field, right? So the inventory is become the number one item on the financial statement, can be significantly impacted for tariff. And tariff add to the cost of imported inventory, raising cost of goods sold and potentially reducing gross margin if price cannot be increased to your customer. If your customer takes $10, but you used to spend $2 importing the item from China, but now with tariff tax war, you don't go to China to get that item anymore. You go to Brazil, and Brazil costs $6. So your cost is no longer $2. Your gross margin is no longer $8. It is $4. So that is what's going to happen to your inventory because of your gross margin is changing. So your net realizable value of your inventory need to be reset. So what I am saying here is at the end of the year, let's say your inventory, you have $1 million inventory in your storage. And that $1 million, even though you bought it for $1 million, but your net realizable value is going to go down. So you will write down your inventory. That means you will increase your cost of goods sold. That means you will have less profit. That also equals to you will pay less taxes. So if I take away all the middle item I was talking about, the higher the inventory value you have on the balance sheet, the more taxes you pay. So as a business owner, you want to actively think about whether your inventory worth what you have put on the balance sheet. So that is a section that is under ASC 330, okay? Accounting Standards Codification, that spell out business must monitor the inventory value, which is lower of the cost or net realizable value, to avoid overstating inventory. What happens if you're overstating? You pay more taxes. So you don't want to overstate, right? Slower demand, higher price can create excessive or obsolete inventory. That ties up your cash. Some of the inventory has expirations. If price went up, people don't buy, and your inventory not gonna go, right? It will expire. So all of these things need to take into consideration. It is another reason to write down the inventory. If tariffs lead to supply shortage, inability to fulfill customer orders, or obsolete inventory, and further complicates inventory value and risks. What if you just don't even have inventory to sell? That means you're losing your sales, right? So those are the things, and we want to really be sensitive to when you are involved with tariff tax side of things. Major company exit U.S. market already. So these are the companies that on the news, you can find them. So I'm here just collecting it for you. So the first company is actually aluminum company. They are related to aircraft. So the Alcoa aluminum used to be able to get the tariff-free aluminum shipped from Canada to U.S. No more. So what does that mean? It means all the way from aircraft to the aluminum paper we use in the kitchen, the price will go up because there's no more tariff-free. It used to be coming from Canada to U.S. So now you know how Canada, U.S. become with this tariff war. So people who are having raw material of aluminum, and they will have to adjust their price. They will have to reevaluate what happens. If they're going to pay tariff tax on that, obviously inventory is expense is higher, their profit margin is lower, and then their realizable value, their net realizable value of inventory is going down, right? So with that said, look at John Deere. John Deere is American icon. I was proud, industry here in Iowa has seen tariff tax cost rise by $500 million. This is report in August of 2025. So by that time, 500 million. So those costs hit their parts because John Deere imports certain parts from different country. So now all the parts gonna grow price. So the tractor gonna be more expensive. So John Deere is quietly exiting the U.S. market. Apple produces iPhone, has shipped their product from India to China, spent billions to reinvest in facilities in India. Shane, and that is a clothing company, and now is quietly exiting U.S. market. Timo, and everybody knows Timo, and they are known for getting cheap product from China. Is no longer cheap. And also that, the 800 threshold, that got eliminated. That take away so much of a business for Timo. So they are quietly moving away from U.S. MGA, American company based in California, produce most of the toys, in the world. And a lot of those sourcing supplies coming from China. So now it is no longer a efficient, effective model. Then of course you have this new auto company. It's a combination of Fiat and Chrysler and PSA. It's 25% tariff tax on vehicles and parts. So this is just not working. But beside economics that not work, and the company themselves will report a lot of losses, and they will change their inventory valuation. They will give you a brand new balance sheet. So the inventory number, if you want to lower the inventory number, what does that mean? That means whatever the number you lowered, that amount goes against the sales, so it reduces the profit. If the profit got reduced, what's gonna be reduced? Taxes too, right? So U.S. government will take less income tax from the company because they are lost. They don't have profit. Obviously, for those private companies, when they don't make money, they exit the market. So that's what they have been doing. Other than inventory, the long-lived asset, long-term asset, intangible goodwill also will be impacted, because if those goodwills are long-term asset on the book, if they used to create certain values, now they just could not because of the tariff taxes shifting the whole operation. They're no longer, give benefit to the company. Then there is what we call the impairment write down. So they could write down, say the piece of machinery works with the China product. Then the China product parts cannot come in cheap anymore. So that big piece of equipment is obsolete. So we will write it down. We will look at this big piece of equipment, do a impairment testing. Okay, 90% of impairment, write it down. So those are, again, take away from the profit of the company. So that is under the ASC 350 and the 360. So this is where impairment testing come in, and you can write down based on the losses that you see in your operation. It's the same asset, it's the same goodwill, but worth less. That's what that is. Textile, leather, and jewelry industry, those sectors are the worst hit, with several importers reporting up to 50% decline in turnover. Automobile and auto parts, the margin are under such a stress due to the very weak overseas demand. So higher input costs. It's just a lot of difficulties in this year's year-end reporting. So I am actually had already got involved with companies who need to relook at their inventory, relook at their intangible goodwill, because they're related to overseas operations. Now with tariff tax, everything is sort of like cut off. Then you have to reevaluate your whole balance sheet. So this is where you can at least do impairment write down to pay less taxes, right? If that impacts you that way. Of course, we all know that if we borrow money from the bank also like to see our financial statement. The bank also want the note to financial statement. This is more like the compliance piece of when you are borrowing money from the bank. The bank just want it. The bank says, I want to see, how you are doing. I want you to calculate EBITDA and working capital, all of these numbers. So these numbers are directly related to your balance sheet, your goodwill, your inventory, all of that stuff. So what is EBITDA? EBITDA is earning before interest expense, taxes, depreciation, and amortization, right? So this is the special earning data that bank wants to see to figure out whether you can still continue carry the debt, or they want you to call your loan to mature, so you have to pay them right away. So those are the things really affecting the business owner, and you don't be surprised if your bank feels that tariff tax is really hurting you in the big way, and they are going to ask for this. They're going to be like, okay, I want to see your, your balance sheet and how much of inventory you have. So all of that coming into this calculation. And just make sure that one business going through a volatile period caused by policies, the lenders and your shareholders are all concerned because you may not make it because of the economy the way it is. All right. Other than the debt side of increasing requirement that bank would probably have for you if you borrow money from the bank, there is a revenue recognition under ASC 606. Okay, tariff can increase transactional level price under customer contract, right? So let's say if you already have a contract, so let's say the contract is 1.2 million, is $100,000 a month, going by that. But with tariff tax coming in, so maybe your 100,000 do not even cover your cost anymore. Because your 100,000 originally you were like, okay, 40% of labor cost, 60% of material. But now with tariff tax, the material is not 60%, it's like 90%. But 10% would not allow you to cover all the labor. So you're in red. The longer the contract goes, the more you lose. All right. So these kind of things happen would trigger your revenue recognition to be different. Because if you already knew you're coming into red and then you want to make sure that your revenue recognition to come in right away, so you didn't make the money, you have a loss, you can go back to negotiate with your customer if it is possible. If not, you need to recognize your loss immediately just because you already know that's what it is. Okay, so hopefully you can still modify your contract. But you want to recognize the contract to make sure that you reflect on your real cost and profit. Okay, that is a immediate loss recognition required by ASC 606 section. And you also want to disclose that if you come up with financial statement with a note to financial statement, then you want to disclose it. All right. Of course, other than the revenue recognition and the other things is uncertainty disclosure. So whether you're a public or privately held company, if you're looking for partners, I want to find a partner to join my business, then that disclosure is actually required. Tariff-driven uncertainty may affect accounting estimate, and you used to be a $500 million company, but it was tariff tax affecting you. Maybe your sales will drop to 400 million. And when you sell the company, wanting to get a new partner coming in, that uncertainty required to be disclosed. If you're a public company, you're absolutely going to disclose it under 10K or under the annual financial statement, note to financial statement. You can't escape that. It's uncertainty disclosure. And you may say that, well, Ying, I have been doing business for years and years and I never really disclosed anything. That is also, that one thing is because you might just be in a small business area and nobody really required you to do that and you don't know to do that. But if you ever coming into the expansion period of your business, you're merging companies and you're getting new shareholders, like the third book I was going to write, right? 2 p.m. Expanding of your business. That is where these disclosures, the estimates, the risk analysis are all coming in because it's not for you. You may don't care about it, but for the buyer, for the people going to put money to buy your business, to be your partner, business must disclose significant assumptions and the judgment areas. So you may say that, I don't think tariff tax will affect you because of certain reasons. That is your assumption. That is your judgment. You need to disclose that so people know how you make your assumption. If company sourcing is concentrated to one country or one area, that concentration risk is huge. We literally have business one out of business, a business went out of the business as soon as tariff tax hit China. The first round, how President Trump changed it a couple times, but in the first round, it went away. So that is how significant the company can be affected if they're so concentrated in a country or in a one area. All right. So the going concern assessment is also required for the public company under ASC 205, 240. So the companies must consider whether tariff impact, although reduced cash flow, working capital supply disconnection, rising cost, but still need to address whether there's substantial doubt about this company to go forward for the next 12 months. Management should document and then disclose the plan to address these kind of going concern. These are part of the requirement again for the company with certain size or public company to address ongoing concern assessment. So I can see that next year, like in 2026, when you look at those financial statements, the annual report online for the public company, and you'll find all of them will have a section on the notes to talk about going concern assessment. All right. Then subsequent event, that is ASC 855, new tariff announcements after reporting period may require disclosure. This is a direct counter for the changing environment we are in. So tariff announced for 30 days, pausing for 90 days, then come back again 30 days, and even President Trump visit China, discuss this, discuss that, and come back with good news, and then trash the good news. So there is so much going on the day when you issue financial statement. If there's a new tariff announcement coming out, you would have to report that as a subsequent event. This is typically for the public company. Our small business owners, you don't need to do that. But subsequent event for small business is to think ahead. You want to think ahead whether those things are affecting you or not. And if not, you are good and you're lucky. But if affecting you, you really need to make arrangement, right? And I know that if you can see the future a little ahead, you're always going to come up with solutions. That is what made up of small business owners. We are tough, we are hardworking, and we are also very intelligent. We know what to do. We know what large business is doing, and we understand how to understand the large scale, apply the small scale on our end. That is what I am trying to accomplish every time we get on Saturday webinar, to give you the knowledge, even though you consider that is too far from you, and I say to you that no, it's not that far. Really, it is part of your life. Subsequent events is a big deal. You need to know what they are so you can plan ahead of time. All right. So now, with all of these knowledges we have already so far, and I want to make sure that the business, how do you broader business strategic considerations? So like to really open up your thoughts about it, and then making sure that you stay afloat, right? Regardless of what's happening. Tariff may force company to re-examine sourcing. Sourcing just means your logistics, right? Where you buy things, where you get the source materials, possibly shifting to domestic suppliers, but also going to other countries has a lower tariff tax. The people who has a lower tariff, obviously, it's almost like if you have a credit card, you never shop in one store. It's not because that store you just don't know they have good stuff and you didn't go. It is because you know that that place, the stuff is not that great. That's why you shop in Home Depot, got a whole bunch of surplus over there, right? So with that said, but this tariff is trying to force the sourcing folks in U.S. to look at other places. So it is not a very immediate solution. Might take years and years to reshift the whole global production. But right now, it is obviously a hard time for many companies. Companies may need more robust scenario planning. That is go without saying, is for sure. And your cash flow, your forecasting, it all need to be re-examined with the tariff tax. And TK, you need to be quiet for 5 more minutes. Is that okay? All right. Risk management, internal control, and the compliance functions become more critical as tariff changes increase regulatory and operational risk. So all of these things, I know they're big terms. Risk management, come on, what they are. Risk management for small businesses is just to say, how do we not run out of money? Internal control for small business, how do we be in compliance so the government don't come over to look for trouble, right? Compliance functions, how do we put in the right effort so we don't spend a whole lot of money but we still are in compliance with compliance functions that are working for us, right? For the medium-sized company, a lot of our companies, we always say that if you have your internal accounting team, you really need to separate receivable payables, right? That is needed because those are internal control functions that we want to see company implementing. Firms lacking infrastructure, like those companies who just the boss does everything, and then, the boss says whatever it is, but without knowing the outside of world is already changed. So those are the ones really need to, start broaden up your business, reuse and really strategically plan how you're going to make next move. Our company don't have to be concerned with tariff tax, but a handful of the companies, I would say in our own, under community CP, we have more than 12,000 clients. I would say at least handful of clients are directly impacted by tariff tax. And they're not small companies. Those companies really have to start thinking how to, broaden business perspective and also strategically considering how to move around from your sourcing all the way to your inventory usage and valuation, right? The key takeaway of today, the company should do now is to perform a comprehensive review of all your operations, supply chain, vendor relationship, contract, all of these things you want to look at. And right now, if you hire people overseas, there's no tariff tax, right? On the professional service side, there's no tariff tax. It's only on things. So think about that. What does that mean, right? Reassess inventory valuation, so important. Reassess your fixed asset. Reassess your goodwill. Reassess your revenue contract. All of these things to, make sure that your financial statement that you give to your tax people had already considered the value of inventory. So really, your inventory is 18 million. And if you do the net realizable value calculation, maybe it's only going to give you 8 million. So then you have 18. Your number is 8 million. So $10 million will reduce your profit. So you will save taxes. At a minimum, if you are a C corporation, you save $210,000 taxes. worth it, worth it. So make sure that you know what I am trying to say here, and I'm giving you the path to how to work on your financial statement. Okay, so with that, I want to say that if you still have questions related to your planning on tariff tax and you have our firm backing you up, you can contact us. This is our partners, and you see, that's me, Yingsa, and I am the CEO and managing partner of Community CPA, and you can always book my time and come in to talk to me. And then the rest of the partners are all listed. We all are specialized in certain areas. Dan Kim has offers a free discovery call, so you can contact him to figure out whether we're the right fit for you, right? And before you even spend money to do any consultation work. Community CPA is very special because we open 6 days a week. Today, 12 inches snow outside, but our office is open. I'm here, and Song, another partner, is also here. Our door is open, and whenever you call, we actually answer your call. We're not a robot. We're not an AI agent to answer your phone calls. We are real people. The only day we close is Sunday, so our company regularly operating Monday to Saturday. And our phone number, if you call 515-288-3188, right? Our number is easy to remember. 288-3188, 3 minus 1 is 2 again. So it's like 288, almost like 288 again. So that's how our number, been for last 28 years. So you call this number, you reach all of our branches. We have 6 different branches, and someone will pick up your call. It will be a real person answer your call. And you can also give Catherine at communitycpa.com the topic you want. Obviously today's topic is one of our client wanted. So we develop that into a talk, and we research and come up with it, right? So you can always give us ideas, so we will see you again. And next Tuesday, it will be me again for a shorter presentation, and I actually already talked with Catherine on what we need to talk about, and I think our Tuesday's webinar would cover related to tip side of information. So making sure that you join us again, it is always helpful. Our webinar is always a do-it-yourself webinar, and we want you to learn and to do everything you could do on your own. And when you really need a real help, and you have us behind you, and we will take care of you. Thank you again, and nice talking to you. Bye-bye. Have a rest of the weekend.